We often say that accounting is the language of business. Well, if accounting is the language of business, then debits and credits are the words of that language. In order to understand accounting, we need to understand debits and credits. Back in 1494, monk Luca Pacioli wrote a paper that set out this double entry system that we use today. Every accounting transaction is recorded with balancing entries on the left side and the right side of our books. Left-hand side is called debits, right-hand side is called credits. One isn't good, one isn't bad. Debit means left, credit means right. The first rule is that all our entries balance. So if we have $1,000 worth of debits, we have $1,000 worth of credits. Now let's look at some of the other rules. Assets are things that we own. Things like cash, land, building, equipment, even accounts receivable. That means we've sent out an invoice to somebody to get paid for some work that we've done or some things that we've sold them. We own those accounts receivable. Assets increase with debits. An easy way to remember that is that assets are on the left-hand side of the balance sheet, so they increase with left-hand entries, in other words, debits. So let's look at our first journal entry. We put a date out here. We write the debits first. We come down, indent a little bit, and we write the credits. The first rule we talked about here is that assets increase with debits. Cash is an asset. In this example, the owner is investing $100,000 cash into his company. So from the company's point of view, cash is increasing. So we debit cash for $100,000. We also have $100,000 worth of credits, so our entry balances. Please note that we don't debit and credit phrases. We use specific account titles here. If you want to tell a story, use the memo section down here below and explain what happened. Okay, assets are things that we own. They increase with debits. An easy way to remember that is they're on the left-hand side of the balance sheet. Liabilities, things that we owe, and owner's equity, the difference between what we own and what we owe, increase with credits. An easy way to remember that is they're on the right-hand side of the balance sheet, and credit means right. So let's look at another journal entry. We put the date out here. We put the debit first. In this case, we borrowed money from the bank, so we got $10,000 cash. Cash is an asset. Assets increase with debits. We already learned that. Notes payable is our credit. So we skip down a line, we indent a little bit, and we credit the account notes payable for $10,000. Again, note that we don't debit and credit phrases. We use specific account titles, either cash or notes payable in this example. If we want to tell a story, we use the memo section down here below. Assets are things that we own. They increase with debits. Liabilities and owner's equity are things that we owe, and the difference is our equity. Those things increase with credits. Now I like to say that expenses are debits, expenses are debits, expenses are debits. So for example, if we pay wages expense on January 20th, we're going to debit the account wages expense for $15,000. Cash is an asset. Assets decrease with credits. So we're going to skip down a line, indent a little, and write our credit of $15,000. And again, note that we debit and credit specific account titles. If we want to tell a story, we tell that in the memo section. If expenses are debits, expenses are debits, expenses are debits, the opposite of expenses, our revenue, our sales, our fees earned, whatever we call it, must be a credit. Expenses are debits, revenues must increase with credits. So let's say on January 20th, we record $200,000 worth of cash sales. Cash is an asset, assets increase with debits. Sales is a revenue account. We may have a revenue account called sales, it may be called fees earned, it could be called legal fees earned, it could be medical fees earned. Whatever our revenue account is, it's going to increase with credits. I like to say that this revenue account keeps track of our sales, whether they get paid today, like we did in this example, tomorrow, if we send out an account receivable, or never. If we send out an account receivable and don't get paid, we still keep track of that sale or that revenue in our revenue account. And just like before, we always debit and credit specific accounts. If we want to tell a story in phrase, we can use the memo section of our journal entry. And our last rule is that owner's drawings look like expenses, but they aren't. Owner's drawings is when the owner takes money out for vacation or to pay himself or herself. They are recorded with debits. So let's say at January 31st, the owner takes $11,000 out of the company for his or her own personal use. We'd debit the account owner's drawings and we'd credit cash, because remember, cash is an asset. It increases with debits, so it must decrease with credits. Again, specific account titles are used here, and if we want to tell a story, we tell it down here in the memo section. So if you can remember those rules, assets increase with debits, liabilities and owner's equity accounts increase with credits, expenses are debits, expenses are debits, expenses are debits. Revenue, which is the opposite of expenses, must be a credit, and owner's drawings, or for a corporation, dividends, look like expenses, but they aren't, but they are recorded with debits. If you can remember those simple rules, accounting class will be a lot more fun. Good luck!